Well, hey, it's the first week of the summer, so the longest day of the year is just around the corner. And I thought we'd just do a little brief market update. So there was a good article that came out today, and it was talking about the housing market and how today's slowing of the housing market, I guess you would say, is different than 2008. So I thought we'd talk a little bit about that. You have seen a slowing in the housing market a little bit, just fewer buyers. Rates have gone up a good 2.5% from the first of the year. And so that impact is kind of starting to be felt. And so there's a little shift going on. But you hear a lot of people talking about bubbles and all that stuff. So this was a good article because it just talks about some differences between now and 2008. So just some stats that I thought were kind of cool. Today, if you look today, 53.5 first mortgage Americans, meaning Americans with a first mortgage, their credit score is 751. You go back to 2010, which is actually 2 years after the real meltdown in the housing market, which is 699. So credit quality is really high compared to back then. Tappable equity, which basically means equity that people could tap into and borrow, just reached an all-time high. I think it was $11 trillion, 44% higher than a year and a half ago, which is nuts. In 2007, another difference is adjustable rate mortgages represented about 36% of all the loans done. And generally those loans, a lot of them were option arms. They weren't underwritten to the same standards. Today, I think 2.5 million, which is 8% of all the loans out there, and they're pretty high quality underwritten loans. Mortgage delinquencies actually reached a record low, even lower than pre-pandemic. So just under 3% of all loans out there are delinquent. And mortgage availability is still a little tight, meaning underwriting standards haven't changed dramatically. So it's still it's still way harder to get a loan today than what it would have been back in 2007, 2008, 2009. And so on and so forth. So I just thought that was good information. And when I saw those stats, it just kind of painted the picture of, hey, look, we are having maybe a shift in our market, but not an ultimate change that's going to be, have people affected dramatically. So,
hey, Eric, I have a question though.
Yeah, Jay Bow.
What makes now a good time for people to still buy houses, even though rates are a little higher?
Yeah, I think that's a good question. So anybody that's serious about buying a house, it's becoming, I would say, less of a seller's market. So in essence, we had several clients that have been looking for a year, started a year ago, that got contracts accepted this week. And it's because they just have less competition. So I think if you're serious, and the rate that you would get today is probably not a rate you're in long term. I think eventually rates go down, and if you buy a house today, you're probably refinancing that loan down the road at some point. So I still think it's a good time to buy a house. You're not going to see the same levels of appreciation that you've seen in the past, but I don't think you see a decline anytime soon. So maybe it's a little bit easier to get something put together today. Great question, Jay Bow.
Thanks.
Thanks.